in tonight's free video, I just want to take a moment and talk about an important market that you should all be watching, especially as we head into the end of the year and beginning 2010, and that's the dollar. One other way you can take a look at it is by looking at the euro. So the euro is sort of the inverse of the dollar. But keep an eye here on the dollar, because the dollar is a very powerful market, and a lot of the times it dictates what other markets do. Because you can see here the dollar's been rallying over the last couple of weeks, and because of that, you've gotten gold weakness, you've gotten some currency weakness like the euro, and you've gotten some weakness in like oil and stuff like that. So keep an eye on the dollar. And the dollar is a very technical, it's a very technical market. It loves to respect the fibs. You can see like from the low here down to, from the high down to that low, you see we respected that 1618 and popped up. And now right here, we're respecting that 127 extension and then holding up. So right here, if this dollar can get any momentum to the upside, then I expect it to get to a retracement level. It could get to as high as the 618, really without too much effort. I don't think it would be too hard for it to get up to this $78 level. So keep an eye here on the dollar. And these small increments, although they're only a couple bucks, will have huge implications on some of the markets such as gold, the euro, stock market, and a lot of other important markets. So lately the stock market's been very stagnant if you take a look at the S&P 500. In fact, let's take a look at it real quick right now. And then go to the daily. The stock market has been very stagnant. You see we've been trading in this range, and it has not really seen the effects of a rallying dollar, such as something like gold has. Gold has seen the effects of a moving dollar. Oil has seen the effects of the moving dollar. The euro has seen the effects of a higher dollar. So the stock market, on the other hand, has kind of been hanging in there tight, and the big question is when is that relationship, or is that relationship going to come back into play? Keep that in mind. Watch it. It's important. You can either look at the euro, which is an inverse of the dollar, or just look at the dollar itself and keep just a close eye on it, because it can dictate what a lot of other markets do, okay? And then we'll see what happens as we head into the end of the year. Now, this week, I expect to be pretty busy. You have FOMC announcement. You have quadruple witching on Friday, which is basically a bunch of contracts, futures, options, and stock options, a bunch of other options that will be expiring that day. So you expect to see some choppiness. We have other news coming out, so it'll be a pretty important week as we head into the last couple of weeks of the year. All right, and one other thing that we're going to be doing is we're going to be doing a webinar on Tuesday evening, and we're going to be talking about a new thing that we've created called the Ratio Trade Radar. And essentially what it does is all the patterns that we look for, there's some very, very, very specific patterns that we like to look for in the stock markets, in the futures markets, in the currency markets. Those of you who've been watching these videos for a long time, they are the same patterns over and over and over again. They repeat themselves in the market. The downside is you always have to search for them. It's hard to find, right? Once you've learned to understand them, then they're very easy to spot with your eye. Just like anything else, repetition builds that skill set, and then you're able to find them, right? Such as like head and shoulders and bear wedges and all that good stuff. So now, with the ratio trade setups that we look at, these specific patterns that are extremely powerful, we've created something for TradeStation called the Ratio Trade Radar. And what it does is it basically looks through any of the markets that you put in here in the radar screen. No, it doesn't matter the time frame of the market. It can be a 5-minute, a 4-hour, 13-minute, 5-minute, doesn't matter. Stocks, futures, currencies, gold, corn, oil, doesn't matter. And what it does is when there's a ratio trade long, it tells you that there's a ratio trade long. When there's a ratio trade short, it tells you that there's a ratio trade short. And it does that by either telling you red for short or green for long. And what we'll be doing on Tuesday evening is we'll explain how this thing works, how powerful it is, how it can really help your trading, especially if you love to trade Fibonacci's. And it really just takes away a lot of the work of finding them and searches and for. So like right here, Aussie yen, there was a long right here that popped up, got the first target, and then kind of sold off. Pound yen, same situation, that popped up right here. He had the long entry like right here, I think it was. Didn't get stopped out, rallied, got that out. And some of the stock plays that we've been going through, such as what was it, SLB last week. That was found by the ratio trade scan. This is obviously not the right time frame. So that was found on the scanner. Green Mountain Coffee Roasters, that was found on the scanner. So a bunch of markets is really, really, really cool. And we'll be talking about it Tuesday evening, 7:30 Eastern, I believe. I will hyperlink it to you at the end of the video. You can also check it out by going to ratiotrading.com. And in the upper right-hand corner, actually, let me drag this in real quick. In the upper right-hand corner, right here, where is it? There we are. In the upper right-hand corner, it says sign up for our live webinars. You click on it, and it'll bring you to this page right here. But I'll hyperlink it to you at the end of the video, and it'll be real cool. We'll talk about how it works, how we talk about how we trade it, and how it largely benefits our trading. So hope to see you there, and we'll see you guys at the next video update.
Hey everyone, I wanted to record a live trade here on gold, and I'm taking, this is just a scalp trade on gold, but this is a ratio trade pattern that's on gold right now. And basically what we did was, you can see I sold about 10 contracts up here. I got a stop here. In fact, I have the ability to trail my stop at this point, and that's purely just based on rules, not emotion. But what I'm looking for is a first target here where I'm going to cover half if we can press down into there at around 115.13. So we'll be talking about a lot more about these specific patterns that we look for and how to trade them in the webinar next week. But the point is just showing you that when you follow a plan, when you follow rules, and you trade these very specific Fibonacci patterns over and over and over again, these are the kind of things you can see, you know, even on charts as small as 2-minute charts. Okay, so I'm gonna watch this. I'm gonna leave this recording, and we'll see if we can get that first target, and then I'll show you how I manage this trade in the event that this thing continues to move lower. All right, so back into the video here, and you see we've begun to press a little bit lower here. Now, if you take a look at structure, and it might be easier noted on a 1-minute chart, you can see we went up here, pulled up, and then we broke down below this low. So what I'm looking for right now, let me leave that there. So what I'm able to do at this point is basically I can trail my stop to a point basically where I'm in very little risk. Okay. So I'm still giving some back, but very little in the event that this thing rallies back up. But what I'm looking for here, okay, is a move. If I get rid of this down to here, you see we went right to the 127 extension, right? Just shy of that. Now, if we can break through that 1618 is basically where I'm looking for that first target. So that's what I'm looking for right now to get that first target. And really, the important part here is just to sit on the sidelines and wait and see if it happens. So we'll see if this thing can press down into those levels, and if it does, we'll take some profits off. If not, we'll get stopped out. Alright, so we got that first target, and you see that we liquidated about half the position there. So at this point, I want to go break even. In fact, I'm going to lock in a little bit just based on this structure here. Okay, so let's go back to our 2-minute chart, and you can see now obviously I want to change this to 5 because that's all I'm holding on to right now, and that's it. That's basically all that I'm doing. So I traded the pattern off of I traded the gold 2-minute off of just a simple ratio trade pattern. It was nothing magical. It wasn't some fancy thing. It was just the Fibonacci pattern that told me to get short. Okay, and one of the things you'll see here, I'll get rid of this, and I'll just show you this little extension here from the swing low up to this high, right? 1618 is where I got short, right? You see it went a little bit against the position and then rolled over. So, you know, that was good for, you know, a couple of bucks, and now I'm basically in a risk-free trade. I've trailed my stop. I've actually got a little bit locked in the event that this rallies and takes me out, but it also leaves me in the position where if this thing happens to roll over, because again, you never know what's going to happen. Just like you have a pop here, this could drop. Pop here, this could drop. So in the event that this thing drops, I can bank from that, right? But if it doesn't, well, that's fine. I've accepted that. So that's kind of just a small setup here, and we'll be talking a lot more about how these trades work and how we take them and why we take them in next week's webinar. But I just wanted to show you the importance of following a plan, executing that plan, not getting emotional about each trade. And now I'm in a situation where if this market can continue to drop lower, I can benefit from that. Okay, guys? So hope that helps, and we'll see you guys at the next update.